Another day of range-bound trade on Dalal Street with the Nifty holding on to the 24,800 mark. Broader indices steeply underperformed with all sectoral indices in the negative territory. Lack of domestic cues and West Asian jitters keep investors on the edge.
Tensions continue to boil in West Asia as fresh waves of missiles pierce the skies. Israel claims it has obliterated Iran's internal security headquarters in Tehran while Iran fires back. Trump says he is still weighing US military action, but reports suggest that Washington is preparing for a possible strike within days. Meanwhile, Israel warns civilians near Iran's Arak nuclear reactor to evacuate.
It's a mega network exclusive. Tata Sons chairman N. Chandrasekaran breaks silence on the Air India tragedy, saying he was hoping for more survivors and planned to set up a trust for victims' families. He confirms the aircraft had a clean safety record, urges calm amid speculation, and stresses Air India's strong focus on safety.
A week after the tragic Air India crash incident, the Civil Aviation Ministry has notified new rules empowering authorities to remove buildings or trees near airports that pose flight risks. Non-compliant structures can be demolished at the owner's cost. While aimed at air safety, the rules raise fresh concerns over property rights and compensation.
SEBI's latest board meet brings a regulatory revamp aimed at easing IPOs, boosting investor participation and cleaning up the market. Key changes include relaxed OFS norms, a special delisting route for PSUs, and fresh rules for the social stock exchange. SEBI also okayed co-investment by AIF and eases norms for FPIs in government securities.
In more corporate updates, Vedanta's annual report outlines sharp strategic focus on timely capex and deleveraging. Now, with $1.5 billion capex lined up, the company aims to scale aluminium output. The company says that the demerger will create pure play verticals primed for faster growth and value unlocking. Very good morning, everyone. Welcome to Buy Now, Sell Now on ET Now with me, Kanishka Sarkar and Ankur Mishra. Here's your one-stop destination for all the market-related queries. Just WhatsApp us your query. Now, don't forget to mention the stock, name, quantity, and your buy price, and also the investment time frame. Over the next 1 hour, our experts will decode the charts and fundamentals for you. But before we get started with the queries, a look at the markets first. Now, it's been a quiet day on the D Street since the beginning of the session. Both Nifty and Sensex, the benchmarks are swinging between green and red, but on a flat note. Now, Nifty continues to hold above that 24,800 mark, whereas the Sensex, that is holding above the 81,400 mark. If you look at the Bank Nifty, that's also relatively quiet, down about 0.2% at this point, holding above that 55,720 mark. If you look at the top gainers that are contributing to the upside on the Nifty, it's Tata Consumer, Eternal, Eicher, another auto name that is M&M, another Bajaj Auto, as I said. Other than that, we have Apollo Hospital and JSW Steel, which are among the top contributors to the upside on the Nifty. But if you take a look at the losers, it's some of the tech names again this time. Now, Tech Mahindra, that is leading the losses on Nifty. Adani Ports also down about 1.7%. IndusInd Bank, another IT name, Infosys, that is also down. Followed by Hindalco and SBI. But apart from that, let's also take a look at a couple of newsmakers which are in focus. Now, Trent, it's in focus after setting a 25% long-term revenue growth target. Brokerages are bullish. Now, Nuvama, Motilal Oswal, Antique, they've all maintained their buy ratings with targets anywhere between 6,627 to 6,900 rupees. On the other hand, Bajaj Auto, as I was talking about, one of the top Nifty gainers today, it is Also in focus on the back of a couple of things. Now, it has launched its new Chetak 3001 electric scooter, which is priced under 1 lakh. It's also the last day to buy shares of Bajaj Auto when it comes to being eligible for dividends. And apart from that, there was a block deal yesterday that happened. Other than that, we have Hero MotoCorp, which is drawing attention on its plans to launch Vida VX2 electric scooter with an innovative battery as a service model targeting affordable EV adoption that starts on July 1st. Other than that, we have Jio Financial Services, which has acquired SBI's entire stake in Jio Payments Bank for 105 crore rupees. But Ankur, what else are you picking up from the markets?
Yes, market is calm today, swinging between red and the green as you were explaining, but big move coming in the insurance sector. ET learns that insurers may soon be allowed to offer value-added services as the government has finalized a draft Insurance Act Amendment Bill. This marks a significant shift from the current regime where insurers can only sell pure insurance products. Anurag Shah joins in with more details on this story.
As government plan to propose Insurance Act Amendment Bill in upcoming monsoon session, and as per our sources, the final draft of bill to allow value-added services to insurers. So, a clause to be introduced which will allow value-added services incidental to insurance business, and the list of value-added services will be finalized by insurance regulator IRDA, and time to time that list can be changed also subject to condition and situation. So, that clause to be introduced in Insurance Act Amendment Bill. This will allow insurance companies to offer value-added services related to the insurance business like gym membership, health checkups, etc. Because presently insurers are not allowed to sell other products, only pure insurance products only insurance companies can sell. But after the value-added services, the overall traction of insurance company and the policy holder will increase due to the value-added services, and this will help in increasing insurance penetration also. That was a demand of insurance companies, and as per our sources in the final Insurance Act Amendment Bill, this clause to be introduced which will allow value-added services incidental to the insurance business, and the services list of services will be decided by insurance regulator IRDA, and that list can be changed time to time subject to conditions and situations.
All right, thank you so much, Anurag, for getting us all those details. But moving on and to get going with our stock-related queries, we are now joined by Sharmila Joshi, who's here with us on the fundamentals. Hi, Sharmila. Very good morning to you. Now, before we get started with all the queries that are coming from our viewers, I want to understand what is the market construct looking like to you. Do you think further consolidation is going to go on given the uncertainty that we are seeing when it comes to geopolitical tensions?
Oh, absolutely. And I think that the way market has been going, I think that really for me, the negative that is standing out today is that we are seeing some cuts even in the broader market. So, typically what we had been seeing over the last 4 or 5 days is that towards the end of the day, we used to see that gap between advances and declines close, which sort of seemed to suggest that selective buying in mid-caps was happening. But today, I think market seems to have let off a bit on that as well. And the news that we are getting from West Asia is not that great, and we'll soon be getting into the weekend. So I think market is sort of getting prepared for that and selling off before the weekend. And I think, this uncertainty is really on the back of geopolitics. Otherwise, we were sort of poised to go to higher levels. So one hopes that some kind of resolution comes about over there. Otherwise, I think we seem to be stuck in a bit of a rage.
All right, we'll come to the queries part, and viewers, be ready with your queries. Remember, you need to specify the quantity and the buying or selling price before asking a query. But we'll take a short break and come back soon.
Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankur Mishra. Well, it's time now to get all your answers to the stock-related queries that you're sending to us. But for more viewers who are just joining us, now share your stock-related queries on WhatsApp. Ping us on 8657974571. The number is also flashing on your screen, so please take note and get all your investment analysis on your holding and tips for fresh buys in the market. Now, write to us ASAP. We'll get all your queries answered. Now, we have Sharmila Joshi, who's here with us to answer our queries on the fundamental side. Sharmila, I'll start with a query that has come from Kolkata. The viewer has 60 stocks of shares of Bajaj Finance at a price of 923 rupees. They've been adjusted for bonus and split. They want to know if they can add more at these current levels. They have an investment window of 2 to 3 years.
So, we've just, as you said, it's just corrected for bonus and stock split. And then typically when that happens, there is a bit of an overhang on the stock because there are people who bought at lower levels, who suddenly have more shares. And also because the liquidity in the stock is more, other large investors who may have been looking to invest now get their quantity at a given price. So what typically happens is that, the stock tends to drift a little sideways or downwards for a bit. So since you already have shares and you're looking to just add, I think wait a bit. I think, wait for about 2-3 months, let all, the stock price sort of settle and then look to enter. It's a great stock. Definitely you can add, but I would just wait for a bit before adding.
All right. We also have Osho Krishnan, senior analyst and technical and derivative research Angel One. Welcome, Osho. I want to ask to you regarding a question which has come from Shaurya. He's asking from Gurgaon about Bharat Forge. He has 100 shares at the rate of 1,340. What is your view? He wants to have his position till 1 year horizon.
Very good morning, firstly, to all of you. Well, now looking at the technical perspective of Bharat Forge, then in the recent period, we have seen a decent resurgence in the counter from the lows of nearly 1000 zone. And from there onwards, it is hovering around the zone of 1300, which even coincides with 200, a simple moving average. But a kind of a correction that we have witnessed from the zone of 1800 towards 1000, and there is a retracement from these levels. So I'm expecting that the counter have seen some kind of trend reversal, and there is a higher possibility that this counter can retest the zone of 1400 to 1450 in the near term. So my advice will be to stay invested in this counter. There has been various positive technical setup that has been seen in the counter in the recent period. So one should stay invested for immediate target of 1450. Once it surpasses the zone of 1450, then we again need to review that whether it has more momentum or the momentum fizzles out in the counter.
All right, thank you, Osho, for that view on Bharat Forge. Sharmila, now coming to you. Leena has written to us from Kolkata. She wants your view on L&T Finance and AB Capital. She wants to know which one is the best stock to buy, which one can give better and quicker returns. I'm sorry, the question is for Osho. I misread.
Both the counters have seen very decent movement in the recent period, and both the counters are near the lifetime high zone. So technically, both the counters on the verge of giving a breakout. For a shorter term perspective, when we can see a greater return or a higher return comparatively between the counters, then it is advisable to maintain cautious approach with a trailing stop loss, because there has been momentum in both the counters. For example, for LTF, the counter have seen a very strong momentum after surpassing the zone of 175. So till now, it is having a potential to retest or to test the zone of 200, 210 in the short-term period. But it is always advisable to trail profits at these levels, because there has been a very strong vertical rally in this counter. So it will be advisable to hold it for a target of nearly 210, but 180 should be seen as a very strong stop loss for LTF. For AB Capital, again, the chart structure is near about the same. It is also having a very strong bullish setup with a positive crossovers also. So I'm expecting that the momentum should continue in the counter on the higher end. Technically, the target is around 275 to 80, while support lies around the zone of 240.
For next query, I want to come to you, Sharmila, because Shashidhar Reddy from Hyderabad is asking about two stocks. One, Cochin Shipyard, his price is 1922. Add more or exit, his question about Cochin Shipyard. And NHPC, price at 92, same, should he hold or exit?
So I'm definitely more sort of positive on Cochin Shipyard and the entire shipping sort of that sector as compared to NHPC. But my only caveat here would be, that your holding period, you need to have at least 3 years when you're looking at Cochin Shipyard at this stage. Their order book is great, but since we've seen such a sharp run up in these sort of defense shipbuilding stocks in the last maybe 2 or 3 years, I think from here onwards, your gains will sort of, you need to temper down your expectation of gains. But that said, they seem to be on a very strong footing given the kind of order book that they're looking at. Coming to NHPC, definitely a sector that I'm positive on, but in terms of valuations and the results of the company, a little sort of neutral on the stock. But I think yes, you could continue to hold at this stage, and maybe you could look at levels closer to your buying price if you give it about 12 to 18 months. But as I said, I'm more positive on Cochin Shipyard than NHPC.
All right, that's the view coming in on Cochin Shipyard and NHPC. Sharmila, I'll stay with you. Another question coming from PVN Rao from Hyderabad. The viewer wants you to help us with some mid-cap ideas for the long term. Small and mid-cap ideas.
I think that is really a little bit too open-ended, but let me try and answer it all the same. I think what you could do is possibly look at some themes, and some of the themes that I like at the moment are, one is of course the financial space, given the fact that we are in this sort of, we've been front-loaded and we have seen a 50 basis point cut, and the monsoons look to be playing out well. So there could be something to build on over there. So anything in the finance or maybe even in the gold loan company space, that could be something that you could look at. We spoke of Bajaj Finance a little while earlier. That's a large cap, but you could look at some of the other stocks within the space. Maybe look at some of the gold lending companies, or a company like a Chola Finvest or a Jio Finance, AB Capital, something like that. I think that could be one space. Another space that you could look at could be the consumption theme, because definitely I think that this spillover will also, if you see rural economies improve, then that spillover will come in the consumption spaces as well. And there you could look at a whole sort of umbrella of stocks. You could look at direct FMCG plays like a Dabur or a Godrej Consumer. Again, Dabur would be a large cap name, but something like that. Or you could look at something within the so all the auto stocks are quite large. But maybe you could look at a truck player like an Ashok Leyland or something like that, or some auto ancillaries within that space, which are Exide, a battery maker, so things like that. Or then complete consumption like a Trend or a stock of that sort. So a pretty, I think I've sort of made it too broad-based a reply, but then the question was also very open-ended.
Thank you so much, Sharmila, for putting everything into perspective and answering that query, which was, as you mentioned, quite broad-based question. For next query by Padam Siv Rao, Bengaluru, I want to come to you, Osho. Apollo Hospital at current price, how do you see? Should one invest at the current levels? What is your technical check saying?
See, overall, the healthcare space is looking very positive on the technical front, and Apollo Hospital has been hovering above the 200-day simple moving average from 5 or 4 trading weeks consistently. So 7,000 is a very strong support zone for the counter, although there has been no positive traction. So one should wait for a consolidation breakout in this counter. On the higher end, any decisive surpass beyond the zone of 7,100 can provide some kind of positive momentum in the counter towards the zone of 75 to 7,600 kind of a zone in a short-term perspective. But as of now, the trend is not clear. The counter is into a very strong consolidation. Said that the outlook is still positive, but on the safer side or being on the conservative side, one should wait for the breakout to happen and try to accumulate it above 7,100 kind of a zone. for targets of nearly 75 to 7600.
All right, those are the targets to watch out for when it comes to Apollo Hospitals.
Welcome back after the break. You're watching Buy Now, Sell Now. Let's continue with the queries. Even the market has now barely come into the green once again, as it is playing hide and seek between red and the green. Now, next query is coming in for ITC and HDFC Bank. Sharmila, our viewer Ignatius from Kolkata, who sends us queries on a very regular basis, has asked, he has 300 stocks of ITC at 454 and 100 stocks of HDFC Bank at 1408. What will you advise?
A clear hold on both. These are both stocks that I do like at current levels. ITC is one of the two listed cigarette players that we have. I mean, they are in other businesses, but cigarette is still their biggest revenue earner, and that business has shown steady growth in spite of it getting punished almost every budget and every taxation issue sort of. And if you look at the valuations, even at this point in time, very compelling. So for me, it's a clear hold. As a disclosure, I hold the stock. HDFC Bank, I've been positive on the stock ever since the merger news, and we did see it go through 12, 18 months of sort of that big debate whether it is going to work. If are they really going to be able to capitalize it on the merger or not? And I still think that there is way to go. I have been positive on the merger. I think now that they are a global bank, for the benefits of that to come to HDFC and then to stock price, there is still a way off. So I think both stocks, my only, you need to be sort of long term. Your orientation should be long term. You should be looking at being invested in them for about 3 years. And then I think for me, both stocks are a clear hold.
All right, both ITC and HDFC Bank a hold for Sharmila if you have a long-term window. But moving on, Osho, now coming to you, we have a viewer, Mekha, who's written to us from UAE. She wants to know your view on 3 stocks. Now, Bajaj Consumer, she has 350 shares at an average price of 227. And there's Titagarh Rail. She has 85 shares at an average price of 1278. About these two, she wants to know if it's a good time to average these two. And another is GAIL. Is it a good time to start? Is it a good time for an entry into GAIL?
Firstly, for Bajaj Consumer, then this counter has been into a very strong selling pressure from the zone of nearly 290 and now is hovering around 180, 170 kind of a zone. But technically, if I have to say, then this counter is into a kind of a less movement happens in this counter as compared to its peer companies like Tata Consumer or Godrej Consumer. So it is always advisable to have some more portfolio diversion towards Tata Consumer or Godrej Consumer as compared to the Bajaj Consumer, because technically also the counter is not very much positive. It is hovering below short-term moving average and the long-term moving average. So it is not advisable to average out the counter at current levels. If one wants to switch from this counter, then Tata Consumer and Godrej Consumer will be a better option from a medium to long-term perspective. Now coming to Titagarh Rail System, then this counter has been again into a corrective phase, but in the recent period, it has seen some kind of resurgence from the zone of 700, which historically has been a very strong support. So I'm expecting that in the near term or in the medium term time frame, there is a possibility for the revival to happen even on the further positive side. On the higher end, approximately 1050 to 1100 is the target, but that is on a gradual basis, not very much aggressive, that in a very short term duration, the counter can see such kind of movement. But on a gradual basis, the counter can see 1100 kind of a zone. So one should stay invested in Titagarh. And for GAIL, this counter has been into a consolidation zone. There has been no strong movement in the near period, but looking at the overall setup in the last couple of trading months, the counter have started gaining some kind of traction in the recent period. So it is advisable to start accumulating the counter at the zone of nearly 175 to 170, which is a very strong support for the counter. Then only one should try to look for adding this counter on some kind of dips. So that is advisable from medium to long term perspective.
All right, that's advice coming in for Bajaj Consumer, Titagarh and Gale. Moving on, we have a query from Raghu Raman from Trichy. He wants to know about HAL. Should he buy at the current price? Sharmila, would you attempt to answer that query?
Well, definitely you could look to buy at current levels because once again, this entire defense space, given the fact that geopolitics where it is, as well as the fact that we now have this pressure to improve our presence in the air, does make HAL an attractive stock. But again, the same caveat, I think you need to be very long term in your approach if you buy it at this price, and also temper your expectations because some of these stocks have, we know the kind of returns they've given you, like from double digit sort of value or 3-digit prices, they've now gone to this is almost at a price of 5,000. So you're not going to get that kind of return, is all I'm saying. But definitely even from current levels, you will get decent returns on the stock, provided you stay invested in it for a slightly longer period of time. So yes, you could buy it if you have like a 3-year horizon in mind.
All right, a buy on HAL if you do have a 3-year kind of horizon. But moving on, Osho, now coming to a query for you. Puneet from Gurgaon has written to us again. He wants to know about NLC India. He has 150 shares at a buy price of 247 rupees. He wants to know if he should add more at the current levels, and if not, then what's the ideal level when he should be adding? What is your target for this one when it comes to a 3-month window?
See, overall, this counter is into a very strong consolidation zone. It has lacked momentum in the recent period. The counter is facing a very stiff resistance of the 200-day simple moving average, which is around the same zone, 245 to 250. So until we witness a decisive surpass beyond 250 kind of a zone, we can see some kind of further continuation of consolidation in the counter. So it is advisable to wait for the counter to give a breakout above the zone of 250, then only we can see some kind of momentum coming back. For the time being, the range for the counter to trade is near about 208 to 250 kind of a zone. So try to accumulate at the lower levels of near to 200 and try to exit around the zone of 245 to 250 until we see a decisive spurt beyond 250 kind of a zone.
All right, thank you so much for that advice, and thank you Osho and Sharmila for joining at this hour. Due to paucity of time, we'll not take further queries, but we are...
Welcome back to ET Now. You're watching Buy Now, Sell Now with me, Kanishka Sarkar and Ankur Mishra. Well, now moving on from stock-related queries and shifting focus to the primary markets then. Now, 3 new SME IPOs are set to open tomorrow: Maya Shield Ventures, Akar Medical and also Safe Enterprises. Now, what are the key factors one should watch out for? What are some of the key concerns that investors should be mindful of? Sharad Dubey is joining us now with all the details there.
Well, as the interest in the SME IPO space is back, and tomorrow on Friday, June 28th, 3 SME IPOs are opening. The first one is Maya Shield Ventures, banker is Nanolia Financial Services. A lot of concerns coming as per the RHP analysis, and the revenue for this road infra company is largely coming from B2G segment. That means that risk is higher, and overall the revenue is concentrated in northeastern states, especially Assam, Manipur and Nagaland. The trade receivables, that's on the higher end, almost doubling in FY25, and a significant delays history they are having when it comes to the statutory dues. Even the debt levels are very high. The second company in focus is Akar Medical Technologies. The banker is Indo-Orient Financial Services. Some concerns are there and some factors are there which works for the company. 2 large bonus issues they had actually done in 2024, and it's a seasonal product, especially in the second half of a calendar year when the festive season kicks in. High margin and niche product when it deals with dermat and cosmetic products, but interestingly PAT that has doubled in FY25 to 6 odd crore rupees. But there are certain concerns also. There's a rising contribution coming in from the revenue side of the own brands, and also the operating cash flows and trade receivables, they seem to improve as well. Safe Enterprise retail fixtures, the banker is Haim Securities, and of course the valuations are expensive for this IPO. A lot of competition in this fitting fixture industry, especially in the commercial segment. and a lot of related party transactions were there as per the RHP analysis. One large customer that contributes roughly 84% of the total revenue in FY25, that raised eyebrows. And also, if you look at the numbers on the financial, that is on the good side. Revenue CAGR of almost 34% in the last 3 years, and a better margin profile than a smaller peer called as Naman in store.
Thanks, Sharad, for decoding the details of all three IPOs. But to navigate further and what should you do about these IPOs, I have been joined by Tapan Doshi, who is analyst and chartered accountant. Welcome to this special coverage, Tapan. I want to come to you first. What is your view on Northeast-based EPC player Maya Shield Ventures and the key concerns for this company?
Well, first of all, thanks for inviting. Well, Maya Shield, I know almost 90% of the revenue is coming from government and mostly from PWT and NHIDCL. Now, that is where you have one big customer, and if there is a change in that, then there is a problem, change in stance of government and all that. Plus, they are majorly catering to Northeast states like Assam, Manipur, Nagaland. Now, you know that many times we have seen unrest in this type of states, and that may also impact in future. That is also one negative. Of course, they have a good revenue and all that, but the problem lies in the financial. If you go at a deeper level, their cash flow is negative. Why? Because their trade receivables is almost double. Now, when you are not getting proper trade means payment on time, your cash flow will be impacted, and they have a negative cash flow, high debt to equity ratio of almost 1.6 times. And that is the one of the reason why they are actually not able to pay this, some of the statutory dues and other dues also. Also, I have seen that some of the cases are pending for this company in the past. So looking at all these factors, I think no, this is an avoid from my side.
All right, an avoid call coming for Maya Shield Ventures. Hi, Mr. Doshi. This is Kanishka also joining in. We have a lot of IPOs coming up. I also want to get your take on fixtures and fittings company, that is Safe Enterprises retail fixtures. Now, is this one worth applying for?
Well, you can see this segment is quite cutting. Many competitors are there, a lot of competition. As a result, there is no moat as such in this type of business. Again, the problem with this company is 84% is coming from one customer only. The revenue, 84% is coming from one customer. That is a big problem. Again, no, there whatever sources they are through which they are taking raw materials. No, there also there are limited suppliers. If any type of price increase at a raw material, they will be impacted, because these are the players, they cannot increase their price overnight, okay, because of so much of competition. And as a result, no, you can say that the margin upgrade may not happen so easily in future. Plus, because so many competitors are there, P rating also it takes time. So all these factors will have a problem with this company. Of course, you can say the sales is increasing, but any big player coming into this segment will actually disturb the whole segment. So that is when looking at all this, I feel this is also a company we can avoid.
Enterprises should also be avoided as per our guest. Now the third IPO and the third question for you. How is the IPO of Aakar Medical Technologies, which specializes in cosmetic, derma, looking? Should investors subscribe or avoid this one as well?
Yeah, actually, this is much better, because if you see their financial health is much better. In 2024, they have given 2 bonuses. Okay, and overall they have their own 38% local brands only. Now, if you have a local brands, your margin will increase. Now they are planning to increase their local brands. 62% is the import. So in future, if they increase their local brands, they may increase the margin. Currently, it is 9.81%. In future, it may go up. Again, the medical aesthetic segment is growing by almost 14% for next 4 to 5 years. So this will directly have a positive benefit for this type of company. Their profitability in last year, financial 25 has been 6 crores, which is double than last year. So that is where also, if you see everywhere, they have a cash flow or receivables, all that is in a much comfortable position. So looking all this, comfortable financial position, good prospects for the future, and this segment is doing well. I think Aakar is a good bet for the long term.
All right, Akar Medical looks like a good bet for the long term as per Mr. Doshi. The other two, an avoid call coming on those two. But with that, it's time to wrap this edition of Buy Now, Sell Now. Mr. Doshi, thanks a lot for joining us and helping us with your take on the primary markets. And it's a goodbye from me and Ankur, but stay tuned. More news and updates coming up on the other side.